Based on the historical data and forecast, Bitcoin exhibits an overall upward trend. The RSI consistently fluctuates, but it mostly remains within the range of 40 to 60, indicating neither strong overbought nor oversold conditions. However, the forecast data suggests a continued upward trajectory, with prices potentially reaching $110,500. Considering the Bollinger Bands, the price has been bouncing between the upper and lower bands, suggesting periods of volatility and potential opportunities. Therefore, I propose a strategy that combines RSI and Bollinger Bands to capitalize on short-term price movements. The strategy involves entering long positions when the RSI dips below 40 and the price touches the lower Bollinger Band. For example, on June 20, 2025, the RSI was 44.3 and the lower Bollinger Band was 101,500. We can enter a long position at $101,500 with a stop loss at $100,000. The target price would be set at the upper Bollinger Band, which was $109,800 on that day. For the forecast period, if the price touches the lower Bollinger Band around $107,800 and the RSI is below 40, we can enter a long position at $107,800 with a stop loss at $106,800 and a target price at $109,000. This combined approach leverages both indicators to identify high probability entry points and manage risk effectively. Based on the historical data and forecast, Ethereum shows a generally upward trend with some volatility. The RSI consistently fluctuates, dipping below 50, indicating periods of relative undervaluation. The Bollinger Bands have been widening, suggesting increased market volatility. Considering the forecast for July 4 to July 10, with prices ranging from $24.70 to $25.90, I recommend a long position strategy. We will use the RSI strategy as the primary approach. When the RSI falls below 35, it signals a potential oversold condition and a buying opportunity. Therefore, when the RSI drops to 33.4 on June 23, we will enter a long position at $2,220. Place a stop-loss order at $2,180 to limit potential losses. The initial target price will be set at $2,580, aligning with the forecast price on July 9. To refine this strategy, we'll incorporate Bollinger Bands as a secondary confirmation. If the price touches the lower band, it reinforces the oversold signal from the RSI. Furthermore, if the price breaks above the upper band, it suggests a potential overbought condition and a possible exit point. Considering the overall trend and forecast, I would adjust the target price to $2,680, the resistance level. This provides a more conservative yet potentially higher return. The final portfolio will be a long position with an entry price of $2,220, a stop-loss price of $2,180, and a target price of $2,680, prioritizing the RSI strategy with Bollinger Bands confirmation for enhanced risk management. Based on the historical data and forecast, XRP exhibits a slightly upward trend with periods of consolidation. The RSI consistently fluctuates, but remains generally above 35, indicating a lack of strong oversold conditions. The Bollinger Bands show that the price is currently near the upper band, suggesting a potential for a pullback. Considering these factors, I propose a moderately aggressive strategy focused on capitalizing on short-term upward movements. We will implement a combined RSI and Bollinger Band strategy with a focus on the forecast data. Our strategy involves entering a long position when the RSI dips below 40 and the price touches the lower Bollinger Band. Specifically, we will enter a long position at $2.19. The stop loss will be set just below the lower Bollinger Band at $2.05 to protect against a sudden downturn. Our initial target price will be the upper Bollinger Band at $2.28. If the price reaches $2.28, we will move the stop loss to break even at $2.19 and set a second target price at $2.27, capitalizing on further upward momentum. This strategy balances risk and reward, leveraging both technical indicators to maximize potential returns while minimizing losses. Based on the historical data and forecast, BNB demonstrates a generally upward trend, testing the support price of $655 consistently. The RSI fluctuating between 33.5 and 57.7 suggests periods of both oversold and overbought conditions, but currently trending towards the middle. The Bollinger Bands show the price oscillating within a defined range, with the recent price nearing the upper band, indicating potential for a pullback. Given this, I recommend a strategic long position. We will enter at $655, coinciding with the support level and a potential bounce back point. A stop loss will be placed at $646, just below the lower Bollinger Band, to mitigate potential downside risk. The initial target price is $670, aligning with the forecast for July 9, 2025, and the upper Bollinger Band, offering a reasonable profit margin. To refine this strategy, we'll incorporate RSI signals. If the RSI dips below 30, consider adding to the position at $645, with a revised stop loss at $638. Conversely, if the RSI reaches 75 or higher, consider taking partial profits at $660. This dynamic approach allows us to capitalize on short-term fluctuations while maintaining a bullish outlook. The portfolio will prioritize the long position with adjustments based on RSI and Bollinger Band signals, aiming for high returns while managing risk effectively. Based on the historical data and forecast, Solana demonstrates a generally upward trend, although with periods of volatility. The RSI consistently remains below the overbought level of 80, fluctuating between 31.7 and 55.2, currently at 52.6. The Bollinger Bands indicate that the price is nearing the upper band, suggesting potential consolidation or a slight pullback. Considering these factors, I propose a moderately bullish strategy with a focus on capitalizing on short-term upward movements while mitigating risk. My recommended strategy is to enter a long position at $145, coinciding with the first day of the forecast period and the current price level. To manage risk, a stop loss should be placed at $142, slightly below the bottom of the Bollinger Bands, providing a buffer against unexpected downturns. The target price for this trade is $155, aligning with the recent resistance level and allowing for a reasonable profit margin. This strategy combines RSI and Bollinger Band signals to maximize potential returns while minimizing downside risk, suitable for a high returns investment approach. Based on the historical data and forecast, TRON exhibits an overall upward trend, consistently bouncing off the support price of $0.278. The RSI fluctuates, but has been trending upwards, indicating increasing buying momentum. The Bollinger Bands show that the price has been moving within the bands, with recent movement towards the upper band, suggesting bullish pressure. Considering these factors, I propose a strategy focused on capitalizing on potential upward movements. We will implement a layered buying strategy, initiating a long position at $0.283. Given the recent upward trend and forecast, a stop-loss order will be set at $0.276, just below the recent Bollinger Band lower band, to mitigate potential losses. The initial target price will be $0.29, aligning with the forecast price and the upper Bollinger Band. To maximize potential returns, we will implement a trailing stop-loss strategy. If the price reaches $0.29, we will move the stop-loss to $0.28. If the price continues to rise and reaches $0.293, we will move the stop-loss to $0.285 and set a final target price of $0.293. This approach allows us to secure profits while still benefiting from further upside potential. This strategy combines RSI, Bollinger Bands, and forecast data to identify high-probability trading opportunities with clearly defined risk management parameters. Based on the historical data and forecast, Dogecoin shows a slight upward trend with periods of volatility. The RSI consistently fluctuates between 27.5 and 49.8, indicating oversold and overbought conditions. The Bollinger Bands suggest recent price consolidation, with the price nearing the lower band. Considering these factors, I recommend a long position with a focus on capitalizing on potential upward momentum. The entry price should be $0.159, coinciding with the initial forecast price and near the lower Bollinger Band. A stop loss should be set at $0.155, slightly below the recent low and the lower Bollinger Band, to limit potential losses. The target price should be $0.168, aligning with the support price and providing a reasonable profit margin. To optimize the strategy, I suggest incorporating RSI signals. When the RSI dips below 30, it signals an oversold condition, reinforcing the buy signal. Conversely, when the RSI approaches 70, it suggests an overbought condition, prompting a partial profit taking. The predicted price movement based on Bollinger Bands suggests that the price will likely stay within the band in the short term. Therefore, the portfolio should prioritize the long position with an entry price of $0.159, a stop loss of $0.155, and a target price of $0.168. This strategy balances risk and reward, capitalizing on the anticipated upward trend while protecting against downside risk. Based on the historical data and forecast, Cardano shows a fluctuating trend with periods of consolidation and upward movement. The RSI consistently remains below the oversold level of 20, indicating a lack of strong selling pressure. The Bollinger Bands show that the price is currently near the lower band, suggesting a potential for a bounce. Considering these factors, I recommend a long position strategy. The entry price will be $0.554, coinciding with the first day of the forecast period and the current proximity to the lower Bollinger Band. A stop loss will be set at $0.542, aligning with the established support level, to mitigate potential losses. The target price will be $0.568, based on the forecast for July 6, 2025, and slightly above the center of the Bollinger Bands. To enhance the strategy, we will incorporate an RSI-based adjustment. If the RSI rises above 60, consider taking partial profits at $0.56 and moving the stop loss to the entry price of $0.554. If the RSI falls below 30, consider tightening the stop loss to $0.55. This dynamic adjustment allows us to capitalize on short-term momentum while protecting against adverse price movements. This portfolio combines the Bollinger Band strategy with the RSI strategy, providing a balanced approach to maximize potential returns while managing risk. Based on the historical data and forecast, Sui shows a mixed trend with periods of consolidation and upward movement. The RSI consistently fluctuates between oversold and overbought levels, indicating potential volatility. The Bollinger Bands show the price moving around the center band, suggesting a range-bound market. Given the current RSI of 53.3, which is overbought, and the forecast price is slightly increasing, I recommend a cautious strategy focusing on short-term gains. We will implement a combined strategy using RSI and Bollinger Bands. The entry price will be $2.87, coinciding with the forecast price for July 10, 2025, and the upper Bollinger Band. A stop-loss order will be placed at $2.77, just below the center of the Bollinger Band, to limit potential losses if the price reverses. The target price will be $2.95, aligning with the support price and providing a reasonable profit margin. This strategy combines the momentum from the overbought RSI with the support of the Bollinger Bands and the established support level, aiming for a high-probability, short-term trade. The combined strategy offers a balanced approach, mitigating risk while capitalizing on potential upward movement. Based on the historical data and forecast, Bitcoin Cash shows an overall upward trend, consistently testing the support price of $460 and nearing the resistance price of $510. The RSI fluctuating between 54 and 65 indicates a moderately bullish momentum, rarely entering oversold or overbought conditions. The Bollinger Bands have widened recently, suggesting increased volatility and potential for price swings. Considering these factors, I recommend a long position strategy. We will enter a long position at $496, placing a stop-loss order at $460 to limit potential losses. The initial target price will be $510, aligning with the resistance level. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI drops below 40, we'll consider entering a long position at the subsequent price above the bottom Bollinger Band. Conversely, if the RSI exceeds 70, we will exit the position. For the forecast period, if the price breaks above $509, we'll raise the target price to $520. If the price falls below $499, we'll adjust the stop loss to $480. This dynamic approach, combining trend analysis with technical indicators, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Cardano shows a fluctuating trend with periods of consolidation and upward movement. The RSI consistently remains below the oversold level of 20, indicating a lack of strong selling pressure. The Bollinger Bands show that the price is currently near the lower band, suggesting a potential for a bounce. Considering these factors, I recommend a long position strategy. The entry price will be $0.554, coinciding with the first day of the forecast period and the current proximity to the lower Bollinger Band. A stop loss will be set at $0.542, aligning with the established support level, to mitigate potential losses. The target price will be $0.568, based on the forecast for July 6, 2025, and slightly above the center of the Bollinger Bands. To enhance the strategy, we will incorporate an RSI-based adjustment. If the RSI rises above 60, consider taking partial profits at $0.56 and moving the stop loss to the entry price of $0.554. If the RSI falls below 30, consider tightening the stop loss to $0.55. This dynamic adjustment allows us to capitalize on short-term momentum while protecting against adverse price movements. This portfolio combines the Bollinger Band strategy with the RSI strategy, providing a balanced approach to maximize potential returns while managing risk. Based on the historical data and forecast, Aave shows a slight upward trend with periods of volatility. The RSI consistently stays above 36, indicating that the asset is not significantly oversold. The Bollinger Bands show that the price has recently been fluctuating within the band, suggesting a period of consolidation. Considering this, I recommend a long position strategy. Entry price should be $268, with a stop loss placed at $259 to protect against a potential downturn. The initial target price is $278, aligning with the forecast and recent resistance levels. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI falls below 38, consider entering a long position at $268, with a stop loss at $259. If the price touches the lower Bollinger Band, which is currently around $232, it signals a potential oversold condition, offering another entry point at $268 with a stop loss at $259. The target price remains at $278. This combined approach leverages both momentum and volatility indicators for a more robust investment decision. Based on the historical data and forecast, Uniswap shows a slight upward trend, fluctuating within the support price of $7.16 and the resistance price of $8.66. The RSI fluctuates around 50, indicating neither overbought nor oversold conditions. The Bollinger Bands show that the price has been oscillating within the bands, suggesting moderate volatility. Considering these factors, I propose a strategy combining RSI and Bollinger Bands, with a slight bias towards a bullish outlook. I recommend a long position entry at $7.11, coinciding with a dip towards the lower Bollinger Band and a relatively low RSI of 45.8. Set a stop loss at $7.05, just below the recent low and the center of the Bollinger Bands. The initial target price is $7.45, aligning with the forecast price for July 10, 2025, and a potential breach of the resistance level. If the price reaches the target, consider moving the stop loss to the entry price to secure profits and potentially extend the target to $7.52, the highest price observed in the historical data. This strategy aims to capitalize on short-term price fluctuations while mitigating risk with carefully placed stop-loss orders. Based on the historical data and forecast, Hedera demonstrates a fluctuating trend with periods of consolidation. The RSI consistently remains below the oversold level of 20, indicating limited downside potential. However, the recent upward movement suggests a potential shift towards a bullish trend, especially considering the forecast prices are consistently above the recent close prices. The Bollinger Bands show that the price is nearing the lower band, which often signals a potential bounce. Therefore, I recommend a long position with an entry price of $0.148. A stop loss should be placed just below the recent low of $0.137 to protect against potential downside risks, setting the stop loss at $0.136. The target price for this long position should be set near the resistance level of $0.167, allowing for a reasonable profit margin while accounting for market volatility. The RSI is trending upwards, which supports the potential for price appreciation. Given the forecast price of $0.154 for the next few days, a more conservative target price of $0.154 would be prudent. Combining these factors, the final strategy is to enter a long position at $0.148, set a stop loss at $0.136, and target a price of $0.154. This strategy balances potential gains with risk management, aligning with a high-return investment approach. Based on the historical data and forecast, Celestia shows a fluctuating trend with a recent dip, suggesting a potential reversal. The RSI consistently remains below 30, indicating an oversold condition, and the forecast prices show a gradual increase. The support price is stable at $1.35, while the resistance is at $2.21. Considering these factors, I recommend a long position strategy. The entry price should be $1.39, coinciding with the initial forecast price and near the established support level. A stop loss should be set at $1.35, just below the support to mitigate potential losses if the price continues to decline. The target price should be $1.49, aligning with the lower Bollinger Band and the predicted price increase over the forecast period. To enhance the strategy, I'll incorporate the Bollinger Bands. When the price touches the lower band, it signals a potential buying opportunity. Given the current oversold RSI and the forecast for a gradual increase, a long position with an entry price of $1.39, a stop loss at $1.35, and a target price of $1.49 presents a favorable risk-reward ratio. This strategy capitalizes on the anticipated rebound from the support level, while the Bollinger Bands provide additional confirmation and help refine the target price. This approach balances risk and reward, aiming for high returns while protecting against significant losses. Based on the historical data and forecast, reserve rights shows a slight upward trend with periods of consolidation. The RSI fluctuates between 31.5 and 55.6, indicating both oversold and overbought conditions. The Bollinger Bands have been relatively tight recently, suggesting low volatility, but the price has been bouncing between the bands. Considering the forecast for the next week, which predicts prices hovering around 0.00664 to 0.00697, I recommend a moderately bullish strategy. I will implement a strategy that combines RSI and Bollinger Bands, with a focus on capitalizing on short-term upward movements while managing risk. My strategy involves entering a long position when the RSI dips below 35 and the price touches the lower Bollinger Band. Specifically, I suggest entering at $0.00664. To mitigate risk, place a stop-loss order at $0.00634, just below the lower Bollinger Band. For the target price, I will aim for the resistance level of $0.00737, which is the upper Bollinger Band. This strategy combines the momentum indicator, RSI, and volatility indicator, Bollinger Bands, to identify potential entry points and manage risk effectively. The anticipated profit is 0.00737 minus 0.00664 is equal to $0.00073. Based on the historical data and forecast, Bonk shows a slight upward trend. The RSI consistently hovers below 50, indicating a generally oversold condition, with a recent climb towards 60, suggesting increasing buying pressure. The Bollinger Bands have been widening, indicating increased volatility. The price is currently near the bottom Bollinger Band, which could signal a potential bounce. Considering these factors, I recommend a long position strategy. The entry price should be $0.0000142. The stop loss should be set just below the support level at $0.0000137 to limit potential losses. The initial target price should be the middle of the Bollinger Bands at $0.0000155, aiming to capitalize on a short-term rebound. To refine this strategy, we'll incorporate a trailing stop-loss based on the Bollinger Bands. Once the price reaches $0.0000155, adjust the stop-loss to the bottom Bollinger Band. If the price continues to rise, maintain this trailing stop-loss. A secondary target price can be set at the top of the Bollinger Bands, $0.0000163, for further gains. If the RSI reaches 80, consider taking profits at $0.0000168. This combined approach leverages RSI for entry, Bollinger Bands for volatility management, and support/resistance for risk mitigation, maximizing potential returns while controlling risk. Based on the historical data and forecast, Pudgy Penguins exhibits a strong upward trend. The price has consistently been rising, breaking through resistance levels and showing increasing momentum. The RSI values have generally been above 50, indicating bullish sentiment, with recent values nearing 75, suggesting a potential, albeit temporary, overbought condition. The Bollinger Bands have also been expanding, confirming the increasing volatility and upward price movement. Considering the forecast data, the price is projected to continue its ascent, reaching $0.0165. Therefore, I recommend a long position strategy with a focus on capitalizing on the ongoing uptrend. My recommended strategy is to enter a long position at $0.0137. Given the recent RSI approaching overbought levels, a conservative stop-loss should be set at $0.0130 to mitigate potential downside risk. The primary target price should be $0.0159, aligning with the forecast peak and allowing for a substantial profit. If the price continues to show strength, a secondary target price of $0.0165 can be considered. This strategy combines the upward trend identified through historical data, the bullish signals from the RSI, and the positive forecast, while incorporating risk management through a carefully placed stop-loss. Based on the historical data and forecast, Sui shows a mixed trend with periods of consolidation and upward movement. The RSI consistently fluctuates between oversold and overbought levels, indicating potential volatility. The Bollinger Bands show the price moving around the center band, suggesting a range-bound market. Given the current RSI of 53.3, which is overbought, and the forecast price is slightly increasing, I recommend a cautious strategy focusing on short-term gains. We will implement a combined strategy using RSI and Bollinger Bands. The entry price will be $2.87, coinciding with the forecast price for July 10, 2025, and the upper Bollinger Band. A stop-loss order will be placed at $2.77, just below the center of the Bollinger Band, to limit potential losses if the price reverses. The target price will be $2.95, aligning with the support price and providing a reasonable profit margin. This strategy combines the momentum from the overbought RSI with the support of the Bollinger Bands and the established support level, aiming for a high probability, short-term trade. The combined strategy offers a balanced approach, mitigating risk while capitalizing on potential upward movement. Based on the historical data and forecast, Zcash demonstrates considerable volatility with fluctuating support and resistance levels. The RSI readings frequently dip below 40, indicating potential oversold conditions, while occasionally nearing 50, suggesting a possible shift in momentum. The Bollinger Bands have been widening, reflecting increased price swings. Considering this, I propose a combined strategy leveraging RSI and Bollinger Bands for high returns. We will start with a long position when the RSI falls below 35 and the price touches the support level of $39.5. The entry price will be $39.5. The stop-loss will be set just below the lower Bollinger Band, at $35.5. The initial target price will be the resistance level of $42.8. To maximize returns, we will implement a dynamic target price adjustment based on the Bollinger Bands. If the price reaches $42.8, we will move the stop-loss to the recent swing low, around $39.5, and adjust the target price to the upper Bollinger Band, which is currently around $52.2. If the price fails to reach $42.8 and the RSI rises above 50, we will exit the position and reevaluate based on new data. This combined strategy, utilizing both RSI and Bollinger Bands, aims to capitalize on potential price rebounds while mitigating risk through strategic stop-loss placements and dynamic target adjustments.